Hello and a very good evening to all of you. Welcome to Stock Durbar with Team William in India. So guys, some few more guys are joining in. So yeah, let's start in a minute or so. Less than a minute I will start. I hope the voice is clear now and you are able to see the Nifty's chart.
Yeah, it's visible, Rushit, Mayuresh. Absolutely fine.
So in this Durbar, our head of research Mayuresh Joshi and my colleague Wakar is also there. So first, as always, we'll start with Nifty's chart, some macro discussion, couple of sectors that we discuss, and then after the 10-12 minutes, we'll jump to, yes, we'll discuss about the mid caps and all those things. And yes, then we will jump to your question after 10-15 minutes. So all three of us will try to answer as many questions as possible. Okay, so let's begin. So again, a very good evening to all of you and welcome to Stock Durbar with Team William in India. So as you can see over here, the Nifty's rally has been excellent after testing this 200 DMA. So it has not stopped. I think the momentum is very good in as far as the Nifty is concerned. It has hold its 21 DMA. So the green line over here is the 21-day moving average, and the pink small over here is the 10 EMA, just to track the short-term thing. But otherwise, the important one is the 21, that is green, 50 is red, and 200 is the black line. So there was a very good support near the 200 DMA. The rebound was strong, and Nifty scaled new height. So Bank Nifty as well as the Sensex was ahead of Nifty to scale the new highs. But this week, Nifty also, last week Nifty also did it. Now, overall, if you see, the market status is in a confirmed uptrend. So on the November 11th, we got a very good follow-through day. And also before that, also we had crossed the previous rally high. So the buy switch was on once we crossed the previous rally high, and then within a week or so, we also got a follow through day on November 11th. And since then, only one distribution day added, so no worries on that front. There is no accumulation of distribution day, no sign of major reversals, and Nifty is holding strong. In fact, if you can see, this is the seventh session when the Nifty closed in the green. So the rally has been really good. So a lot of things are fueling. So not only in India, but globally also the markets are in a very good shape. So yesterday you saw that in the US market also there was a sharp reversal. Even before that, so this month has been very good for the not only the Indian equity but the global equity market. So there are a lot of sectors that have been doing well in this rally. And if you look from the economic point of view, so yesterday our GDP data was a decent number, 6.3%, though the expectation was somewhere around that only 6.3 to 4, and it was in line. So a lot of tension was there globally related to this China COVID policies, because so that there was some issues firstly in the Chinese market, that the supply chain will get disrupted because a lot of raw material, a lot of input always comes from the China, right? They are the manufacturing hub of the world. So whenever there is a supply chain problem from the China, it will impact the end product. So you might be hearing about those Apple production getting hold. Other companies also having if they are importing the things from China, then their supply chain will be in a problem, and that's how their cost increases. The product is not getting ready on the time, so there is always a crunch as far as the products are there, and the demand is robust globally. So you might have seen the news about that Black Friday sale in USA. So this was the highest ever. So even when there is a discussion around the slowdown in the economy, the situation is not that great. The inflation is at an all-time high, but it has not impacted on the Black Friday or the Cyber Monday numbers. So they have been really robust. And yes, so the major issue is around the China, and there's no major discussion now around the Russia-Ukraine issue. But yes, that is a looming thing. There's no clear indication from there yet as of now. So what's good for India in the last few couple of weeks is about the crude. So crude in a comfortable zone, like when it is below 90 or you can say 85, 80s, if it remains, then that is very positive for India. Our CAD is rising, and if the crude gets, in line below 80 or 80s में रहता है for a long time. I'm not saying एक या दो दिन 81, 82 हो गया उससे कुछ नहीं होता. But if we remain for a month, at least for a quarter over, then that will be positive for our company as for the Indian companies as well, because the margin hits जो हो रहा है अभी demand में problem नहीं है, demand is robust, right? But the problem is कि margin hit हो रहा है companies के so if you get a cheaper crude, and so that will ease the inflation in India as well as the retail CPI inflation भी कम हो जाएगा और companies के भी ultimate margins strong हो जाएंगे. Logistics cost will go down, which is always a major one. Yes, so some important events like December 4th, there is a OPEC plus meet, and so December 4th will and 5th, those couple of days will be very important as far as the crude oil prices are concerned. And if you look at the December, the major event on 15th, there is a Fed meeting, and after the yesterday's Mr. Powell's comment, the expectation is कि अभी 0.5 से ज़्यादा नहीं होगा hike, 50 bips hike होगा इस बार, not more than that. That can be even lower than that. But yes, जो 75 bips वाला pricing होता था वो अभी नहीं हो रहा है. So majority expectation is 50 bips rate hike. And from there, we will get a good direction about how the next rate hikes can be. Will they shift to the normal 25 bips, or when will they stop? So that's how what the market is looking forward to. But nevertheless, the focus will then shift on the earnings, because once the December is over, the earning season will start again globally, and that will be very crucial to see that how the earning season pans out after this rate hike things get settled. If I'm not saying it will get settled on December 15, but if it gets some clear view about if this comes 50 and if there is comment that now there won't be something more than this, then that will be a bit positive for the market sentiments. And yes, if you track closely, so next Thursday there is a election result for Gujarat and Himachal Pradesh. So that might add some volatility to the market, but most probably there might not be a major long-term impact. But yes, that had happened last time in 2017 when Gujarat result came. There was a huge volatility intraday, and just on a lighter note, this time it's on Thursday. So let's see what happens to the premiums. Okay, so Nifty very comfortable as far as the things are concerned. The important level to watch out for, the first one is the 10 EMA 18 550 600 from the where the lifetime high का जो breakout था. So just to talk the levels quickly, जो यहाँ पे ये जो life high का breakout था, ठीक है, that can be the first support. 550 600 can act as the first level of support. If we see that support getting breached, then the most important in these kind of rallies are always rising 21 DMA. So that is somewhere around 340 as of now. And so 50 DMA is quite far. So generally it's around 17,800 level, and it is almost 5.7 to 6% higher. So there are high chances of a consolidation as well. Yeah, this is also a good thing to discuss. So generally you don't see the huge extension from the 50 DMA. Whenever there is some 6-7% from extension from the 50 DMA, there is a small correction, maybe 200-300 points, or you might see that the market may move sideways. But this is an ideal situation, but generally the rally is very good. So let's see how it moves ahead. Now, if we see Nifty Bank, so over here, that's what I was discussing. There is a not that much rally as the Nifty is doing, because now it is in a bit of consolidation mode. So if you can see the last 4 or 5 sessions, so there's no major movement as far as the Bank Nifty is concerned. No doubt the rally was triggered by the strong momentum in the Bank Nifty, but since November 14, you can see the high was somewhere around 43,200, then that 43,400. So वहां पे एक range में consolidate किया, but it is not breaching the very short term 10 EMA that is trending higher. So for Bank Nifty also, the 10 EMA level as well as the 21 DMA around 42, 300, 400 becomes very important to hold for this rally to continue. If we look at the Pharma index, there has been some momentum from the 200 DMA. Over here also, it found a good support near 200 DMA. And now it has reclaimed its 50 as well as the 21 DMA. And there has been some good setup in some pharma stocks as well. So they are going off highs. So overall, this index has been an underperformer in the recent rallies. So if you can see over here, so in October 21, the index was somewhere around 15,000 level. So 14,900 plus ka usne high banaya tha. So it is, notably off highs, almost 8% off highs. The pharma indexes when the Nifty has moved couple of percent above its all-time high. So if you look at autos, so today a lot of auto numbers are out and will be out by the end of the day for the November sales. So yes, this index is trading very close to its all-time high, just a couple of percent below the all-time high. And the overall setup also, it's quite good. So it is trading above all its key moving averages. So many of the stocks having a very good setup as far as the auto sector is concerned. And now if we take metal, yeah, so this has been in the momentum. So this is out of a consolidation. So if you can see over here, just a second. Yes, so from the 200 DMA in the mid of the October, it had started a very good rally and it moved about that 6,600 level by November 15. So in 1 month, there was a very good rally. And then the second half of the November, there was a consolidation, if you can see over here. So after a rally for a month, there was a consolidation. So this is a very healthy sign whenever a consolidation is followed after a rally. और जब वो consolidation होता है and market कोई key moving averages breach नहीं करता है, index कोई let's say over here metal index ने 21 DMA को hold किया ये green line को, it has not breached that level. So that is something positive, and now it has again moved higher. So I think today's action is not captured, but the momentum was very good. And also the leading stock, if you see, I just saw today, I think Tata Steel reclaimed its 200 DMA. Let's check. Yes. So Tata Steel reclaimed its 200 DMA. Even yes, today it closed above that level. So this is first time. यहाँ पे जब breach हुआ था May 2022 में, उसके बाद वो 200 DMA से 3 बार almost resistance लिया, and today it reclaimed that level. And look at the volume. The volume has been very good when it reclaimed the 200 DMA. So this is how the setup are positive as far as the metals are also concerned. The JSW has also given a good breakout of the consolidation, and even the other metal stocks are doing well. We'll discuss it. Sure. If we look at the IT, so yes, IT sector reclaimed its 200 DMA after a long time. उसका अप्रैल में जब यहाँ पे ब्रीच हुआ था, so since then there was no reclaiming of 200 DMA. So this tech world, the IT part of the world was in a problem. So Nasdaq was the top loser in the US as well. And even in India, like due to the fear of the spending cut on the technology by the global firms, because we are a lot dependent upon the US and the Europe as far as the IT spendings in that area is concerned, because most of the orders that our leading firms get are from the US and the Europe. And if due to the high inflation, due to a bit of slowdown in the growth, if you see that the technology spendings are cut, then that's always an issue for the Indian IT companies. Also, there was a margin pressure due to the attrition, new hiring at a higher cost, right? So the margin pressure was also building up in the IT stocks. But now it has it is trading above its key moving averages. So in October, it reclaimed its 50 DMA strongly, and then gradually it moved higher, and now it is trading above the 200 DMA. So consolidating over here, or holding 200 DMA and continuing the momentum becomes very crucial as of now. If you see the leading stocks in the IT sector, and guys, whatever I'm discussing, you guys know, we start with that. It's a clear disclaimer. It's not an investment advice to buy or sell the stock or index. It's just our market view, and we are trying to share the knowledge. So see over here also, last week, TCS reclaimed its 200 DMA. So it breached its 200 DMA in April along with the IT index, and now that's for first time last week that it moved above its 200 DMA. So technical setups are improving, but still that momentum is not coming. You look at the RS rating. The RS rating is quite poor, and the line also is not moving higher a bit. So now you want from here 40, if this ratings goes to 50, and if the line is moving higher, then that's the ideal scenario. Also, it is 14% to pivot and almost 14% off highs. So generally जब कोई स्टॉक इतना ऑफ हाइज रहता है, तब एक प्रेशर बिल्टअप होता है जब ऊपर जाने में ऑफ हाइज की वजह से. So yeah, that might IT might face that, but let's see how it goes on. Okay, so now I will take your questions. Already 12-15 minutes we had discussed from our side. So Mayuresh, any comments from your side, or should we start with the Q&A?
I think good enough, Roshan. Thanks for the opening session. So I think the common questions that are getting asked not only in this forum but across forums, whether it's Twitter or television channels, is largely the markets have made all-time highs, but a lot of portfolios are probably struggling at lower levels. So I think the entire context to look at this is largely that when a lot of flow adjustment starts happening, right, it's more to do with the index level or the ETF flows, as we call it. And then there was specific action in terms of MSCI changes for a few mid-cap stocks. Case in point being, look at the move of Varun Beverages yesterday, right? MSCI adjustment, and there was a huge 12% move in yesterday's session as well. The other element is that when you're probably looking at the index and the composition within the index itself, a large part, if you leave aside Reliance, which is the highest single individual contributor to the index, banks have done phenomenally well. So I think if you look at the larger spectrum within the banking index and you pick up any stock in terms of results, or even the EPS rating on the O'Neill methodology, banks have done phenomenally well. As Rushit was trying to put forth the point, it is largely now going through a period of consolidation. If you look at the other weightages in the index itself, 1/3 of Nifty earnings largely come in from the energy space. So I think 1/3 of Nifty earnings is largely dependent in terms of how energy prices, how oil, how gas prices are inherently moving or are expected to move in the near term. Whether you talk about your upstream companies, downstream companies, which include your oil refiners, or even the largest contributor, which is Reliance, which has done a good move. Large expectation from a Q3 perspective with the movement of crude, that margin should probably stay stable, should improve. To a large extent, GRMs have moved up significantly. The petchem part of the business is largely dependent on crude, which means even the petchem part of the business, the utilization and the realization should show significant signs of improvement. And therefore, 1/3 of the Nifty earnings should probably be stable at this point of time. IT is more or less, as Rushit rightly pointed out, coming out from the bottom that it has created. Whether there will be sustainability in terms of what happens next with a lot of holidays this year compared to last in the third quarter, and if there is a, a, a probability, right, of how much the US goes into a recession and how bad the trends in Europe might be, order flows might actually start getting muted off. So I think Q4 will determine what largely happens in terms of uh, the overall implications when it comes to free cash flows for the IT sector. So I think if you look at the a large element of the stocks, they are way away from their pivot levels at this point of time, right? And therefore, even the larger names like TCS, Infosys, stay almost 8, 10, 12 odd percent from their key pivot levels. The mid-cap universe, a similar story. Outlier, one of the outliers is KPIT, which is in stage 4, but we are very, very clear on the ODL methodology in terms of not chasing larger or stage bases which are in the latter part, stage 4 and above. On the global part, when it comes to Nifty earnings, you've also got a significant contribution to the likes of a Tata Steel, Tata Motors contributing significantly. And therefore, if you probably look at the overall index composition, the flows that are coming in, the protection of earnings from one segment at least expected to happen in the coming quarter, and the large expectations of holding out compared to the rest of the world, which is facing a lot of issues, is probably driving Nifty higher. The broader market, leaving aside specific pockets, if you probably look at the defense space, right, a few months back, phenomenally well. Fertilizers had a good spurt, but they have probably again consolidated after that huge spurt that you probably seen. Railway stocks in a zone of its own, right? So I think what has largely happened is certain pockets within the broader universe are probably moving where there might be policy announcement, expectations of regulatory changes, capex by the government expected to hold earnings up because more orders will come through at better margins, creating leverage. And therefore, the EPS RS rating and the key pivot levels above which these stocks are trading are significantly higher. And therefore, I think the whole context that we are trying to put forth is that there will be sectoral churns. The sectoral churns that we've seen happen pre-COVID and post-COVID. The cycles have shortened quite significantly. So even if you talk about the metal cycle being for 2.5 years, the sugar cycle being for 2 years, a rice cycle probably moving around for 1.5 years, the cyclicality, leaving aside albeit a few changes in terms of soft commodities, has largely shortened to a large extent. Therefore, looking at our filters on the industry classification, the sector rotation graph, which I pointed out in our tweets yesterday, becomes very important. But because of the composition that a lot of mid caps have, and the mid and small cap universe spread across sectors, across market caps as well, I think the moves from an investor's perspective at higher levels, they become a little bit skeptical when you're probably looking at investors, because if they probably look at global scene and if the markets do correct, I think again, this is what we are calling as biases or perceptions, might actually start coming out. And therefore, the underperformance of mid and small caps, I think 4 or 5%, if I'm not mistaken, mid cap to its all-time high. But I think qualitative breakouts, if we just stay put, ensure that the earnings are going to be by their side, and though it is going through a phase of consolidation, my own sense is that mid caps might actually perform. December, with expectations of the Santa Claus rally, a lot of NAV prop up happening on the local and domestic scale, might prop up because the underperformance of mid caps has been quite stark to the large cap or the index level stocks. And therefore, the index level stocks might go into a consolidation. Small caps can start performing looking at the data points that we've probably got. And if there is a strong move that happens to the all-time highs, I think there can be a parabolic move that you might or we might probably. As having said that, let us take a few stocks. I will also answer a few questions that you guys have asked on the metal sector, defense sector. But Rushit, Vakar, let's start with a few stocks so that we can get this going.
Sure, Mayuresh. Let's start with PSU banks. So there's a couple of questions that about the performance of the PSU banks. That has been really good over the last couple of months. So since the mid of the October, there has been a strong rally in the PSU banks, and not even that, but if you go back to June, so since June pe low bana tha PSU bank, and from there has been a very good improvement as far as the prices of PSU bank stocks are concerned. See, firstly, जो एक perception था ना PSU बैंक का, वो अभी change हुआ है last couple of quarters में because of their healthy numbers. So look at the NPAs, the credit growth. So NPA improve ho gaya hai if you compare over the last 4-5 years. So the improvement started from 2018-19, and the NPA has been, the improvement has been very good as far as the asset quality is concerned. Now their lending is also increasing. So firstly जो problem क्या होता था, हम बोलते थे कि भाई ये corporate heavy है ना, वो drag होता था PSU बैंक के लिए, because there was that impression of that corporate heavy books होते हैं इनका, अभी corporate में इतना credit growth नहीं है तो पैसा कब वापस आएगा. So that was a problem. But now there is a high public and private capex going on, and the utilization of working capital limits has been very good. There has been a pickup in the corporate credit. So ये जो corporate credit cycle pickup हुआ है उसकी वजह से there has been some attraction towards the PSU bank. Plus, if you look at the valuation wise, the owner, there was a under ownership. So all these factors leaded to a very strong rally in the PSU banks. So now next is, will it continue? So that's the second part of the question. So see, the PSU bank index is around its 2017 high. If you can see, that was somewhere around 4,300, but we are not till over there. So if you see the high for the PSU index, so it's somewhere around the 4,100, 200. So looking at the way Nifty, the bank Nifties and all have crossed the highs, there are high chances that the PSU banks index might also cross that high, and the rally might continue. So the specific question then came down to PNB. So yes, PNB has been good. So it was forming a bottom over here for a very long period of time. It was in this consolidation zone of 50 to 25 rupees, but now it has moved above that level. The breakout from a stage one cup base was very good. One thing is that the cup with handle base was a bit wide and loose. So this is not something ideally that you look for, such a wide and loose base. But yes, due to the momentum in the index level, जो उनका momentum है, the group, entire group is in the momentum. So the breakout was successful, and the accumulation was on a very good volume, if you can see. So especially on the right side of the base, the volume was quite high. Even after the breakout, the volume was high. The blue dots are there over here. It means the relative strength is at a fresh all-time high. Even the accumulation distribution rating is quite decent. So now the important is they should continue with the credit growth as well as the quality in the assets. So if they are able to do it, then the momentum might continue over here. But the story, the momentum is a long-term thing, but in short term, you should always focus on the technicals. So if it is too much extended from the base, not a case over here, but yes, it is 19% above the pivot and it has hit power to pivot. So जब भी power to pivot hit होता है, then according to O'Neill, you give some 6 to 8 weeks of time for the stocks to perform. On the flip side, you should keep a stop loss. You should be very disciplined about your risk management, especially keep in mind the 21 DMA, the 50 DMA, or you can trail your profits, or you can have a certain stop loss in mind if you are adding the stock at an extended level. Ideally, according to O'Neill, extension pe add karna is not something that we suggest, but yes, if you must, then you should be very strict with your risk management. Okay, if we look at the Maruti, so there was a good rally in Maruti from the lows from the March itself, and then it had made a fresh high over here. So if you can see, so 9,900 was a high for the Maruti in 2018. Since then, it has not been to that level, but recently it made a high around 97.69, and currently it is consolidating around the 9,000 zone, and it is just near its 50 DMA. So वहाँ के पूरा it is oscillating around its 50 DMA. So you want a convincing breakout above the 50 DMA. And if you see over here, the cup base formation was there. There was no clear handle formation, but yes, there is a sideways movement over here. So the important to look over here on the higher side is that the stock closes well above its 50 and 21 DMA. और जब वो होता है तो वॉल्यूम हाई होना चाहिए. So this is an important criteria. you see that 50 or 21 DMA reclaim करके 1% ऊपर बंद हुआ और उस दिन volumes high है, and that is a +1 for the chart, and you want this ratings to improve. So RS rating should improve, the buyer demand should go to A, group rank में थोड़ा improvement आ जाता है, so that is something to look out for. Otherwise demand में कोई problem नहीं है auto stocks के लिए, so demand has been robust. Even Maruti is coming up with the new model, so now again they are back. It looks like they are again into that competition which last year लगा था कि वो थोड़ा lag हो गए उससे, but now they are trying to cope up with that in the SUV segments also. They are now getting aggressive, launching the new cars over there also. So overall, the growth story, the numbers have been decent. But if you see some input cost getting relaxed and they are able to pass on the higher prices, then that will be very good for the stock. But yes, technically, you need some good momentum above 21 DA.
Rishit Vakarya.
Yeah, okay.
Yeah. Can you give me the chart for VIP? Yeah. Industries.
Again, like one of the chart we've discussed in the pre-bell after us as well. The stock is forming a cup with handle base. Currently in the handle formations, stock is coming down, but as you can see, the stock is coming down on lower volumes. So, which is a good sign on the handle front. When the stock comes down on lower volumes, it should consolidate or mildly correct on lower volumes. So that is a good sign. If we talk about the ratings front, EPS rating of 81 is really good. Price strength of 68 is fair, but if you look at the right hand side of the curve, at that point of time, the RS line was moving higher, and eventually when the handle forms, your RS line tends to move sideways or slightly on the lower direction as well. But if probably on the breakout, if you see above average volumes and the RS line tends to move higher, then it's a good stock to look out for. I mean, if we go to talk about the results, I mean, the results was decent. It was a slight miss if you look at from the estimate front. And if we talk about the con call highlights from the company, I mean, the company is working on gaining back the lost market share and focusing on the mass as well as the value segment. The organized players, including the company, VIP Industries, is focusing to snatch the market share back from the unbranded and the unorganized segment as well. So overall, they're seeing revival in backpack. Overall, they're seeing revival in international travel, school, colleges, as well as a normal wedding season going forward. Like there's expected huge number of weddings coming up in the November and the December season. So you can see a good amount of travel happening post that. So overall, even your raw material prices have been easing off for the company. So it's a good space to be in. Probably a breakout from here on an above average volume is probably what is desirable, and probably having a strict stop loss rule is what if one is following the strict stop loss rule is what is advised. That is around a 7 to 8%. That is we always talk about. The other Rishit will talk about is Jyothi Labs, Jyothi Laboratories. So again, like one of the stocks that we discussed in the after hours in the pre-bell session as well, mostly satisfying most of the canceling parameters. EPS strength is fair at around 78, but if you look at the last couple of quarters, 3 quarters, the EPS is moving higher. The sales are moving higher for the company. Overall margins have been stable, and similarly, if you look at the previous base that the company was making, on the right hand side of the base, you could see blue dots happening as well. So overall, on the technical front as well, it's moving good. On the right hand side of the current base as well, you can see some big blue bars, volume bars coming up along with your RS line moving higher. So that's a good sign. And off highs as well, the stock is just 3% from the pivot and 3% to off highs as well. So probably it's catching up with the market, staying abreast with the market, and it's not lagging at the moment. Overall, I mean, talking about the company, it's the I mean, it's the manufacturer of the brand name that's Ujala, a household name that we talk about for fabric whitener with more than 83% market share. Even earlier that I discussed in terms of margins and the Q2 FY23 result, mainly it's been stable. Margins have been stable. Sales growth is there majorly because of pricing growth. And overall, if you talk about from the RM front, expecting some kind of softening in the palm oil and the propylene prices. Gross margins for the company is likely to improve. And for FY14, FY24 as well, you can expect the margins to improve back to 14%. Currently is in the levels of 12.4%. And the fabric dishwashing and the fabric washing segment is expected to probably CAGR at around 13-14% according to consensus estimate. So overall, if you look at from the historical and the consensus, that is the future front, it's looking good for the company at these levels. Probably, I mean, an above average breakout is what's required at the moment. Again, a good stock, I mean, picked up by in terms of the audience. Rushid, the other we can discuss is Titan. So the base was kind of deep, if you talk about like a 34-35% the base, but in terms of it's a stage one base, talking about the results as well, the result was like clearly out of the box for the company in terms of the volume growth that they got, this in terms of improvement in the studded ratio. Their talks in terms of I mean the festive season plus the company is expecting a good festive season as well. So overall that is really good, but if we talk it from the technical front, that didn't translate in terms of if you look at it, the breakout from the cup with handle pattern didn't happen. And if you look at from the top right hand side, the top of the base, the RS line is just deteriorating. So that is probably not a good sign. I mean, probably at that moment, if you look at it, RS was probably in the fair zone, that is around the 60 to 70 levels, have come down to 51, which is poor. So, which is not a good sign. And similarly, the stock is below the red line, that is the 50 DMA as well. So probably what even Rushit was talking about, and what even it's really important from a technical perspective as well, to probably hold on to these 50 DMA levels in markets like these. And even if you're breaching those levels, I mean, then the regain on these levels should be on above average volume. So, I mean, before breaking out as well, probably the stock should, I mean, regain its 50 DMA on an above average volume, probably for a future run up in the stock. If it's there, it should, and the future run up to materialize, the 50 DMA is a very important line.
I think so.
Okay.
So we can discuss Reliance. So yeah, as Mahesh also told, this was the stock that pulled the market higher, and one of them. So if you see the consolidation that is going on in the Reliance, it is forming a stage 1C consolidation base. So the rebound recently from the 250 DMA was very good. So it reclaimed its 200 as well as the 50 DMA at the end of the October, and since then it is holding that level and trying to move higher. The stock is currently trading 5% off highs, and it's 5% to pivot, as you can see over here. So this is the green line is the pivot line. So you need some 5% move for the stock to be in the ideal buy zone and make a new 52-week high. The ratings, if you can see, what I like is about the accumulation and the distribution. So the accumulation has been good. So if you can see, when the stock is moving higher, the volume is decent, and in the correction phase recently. So let's see, for example, the 2642 to the correction to till the 200 DMA, the volume was a thin over here. So this is something positive whenever the stock is moving higher on a good volume, and while correcting, the volume is lower. So the pattern looks quite well. You need some price RS rating improvement. So the RS rating is just 50 and the line is not that well into the momentum. You need something like this. So whenever it is moving higher from bottom, you want some formation of RS like this over here. So if we see these kind of RS improvements, so let's say by the time it breaks out, you have the RS of 60 and more from the 50 currently in the next a week or so, then that will be positive breakout on a higher volume. And the other ratings are good. The earnings have been good. They are the businesses are well. I think this time the growth was decent. The EBITDA growth was good. Even there was a good recovery in its O2C businesses. The digital business did well. The ARPUs are increasing. The customer base for Jio is increasing. The core RIL business is also done decently well. So overall, it's a good stock and setup. But what you need is a good breakout on a higher volume. So early entry, it's a bit risky as far as the current market is concerned when the market is at that high. So it's not good to take an early entry in the stock, but wait for a clean breakout. The next was on Zeal, that is Z Entertainment. So there was some momentum in the stock couple of months back. So there was some news around that, the confirmation that the IPL, some rights are getting to Z, the Sony Z merger. पहले clearance नहीं मिल रहा था, फिर there is some clearance for that merger also, but no decent momentum seen over here. So it is oscillating around its 50 and 200 DMA. So after hitting that 280 level in mid-September, it is moving in that 250 280 types of zone. कोई breakdown नहीं हो रहा है, कोई मेजर मोमेंटम नहीं मिल रहा है स्टॉक को, एंड द वॉल्यूम्स हैव बीन थिन कंपैरेटिवली. अगर यहाँ पे आप वॉल्यूम देखें तो काफी थे, बट यू कैन सी द 50-day मूविंग एवरेज जो है इसका वॉल्यूम का, वो भी सॉरी द वॉल्यूम एवरेज वॉल्यूम इज आल्सो मूविंग लोअर, और वॉल्यूम तो उससे भी कम होता जा रहा है, राइट. सो द वॉल्यूम एक्शन इज बिट लो एज फार एज द Z इज कंसर्न, and you want some base formation over here. So once this period of consolidation is over, you want some momentum and base formation at this point of time, and then you can look at that. The problem is the earnings. So you want some earning improvements. The EPS is very poor. The EPS of 21 is poor. Even the other technical ratings are weak, and this is a very not a ideal stock to have it in your portfolio at this point of time. There may be some rallies from the lows and it can be deceiving, but there are multiple ideas that are breaking out of the base, that is having a solid technicals. इसका fundamental strong है. Even there are very good growth drivers. कि उनका over the last few quarter उनका earnings काफी बड़ा है, market shares बड़ा है. ऐसे बहुत सारी companies है. When you scan through the scanners over in the MSI, or you can see our portfolio, there are a lot of good companies that are in momentum. So try to go with them, right? According to only you buy high, sell higher, rather than trying to do the bottom fishing. So that's what we always look for. So you want something which is very good, having a good ratings and a good technical setup. Okay, then there is question on Mazagon. Huge rally. So the stock is almost 175% up from its breakout in August, on August 26th. And the momentum has been very good. All the ratings, there's no doubt about that. Even the fundamentals as well as the fund holdings have increased. And looks like a lot of institutional buying over here, looking at the volume, the way it is moving higher. The only thing to now look for is the extension from the 200 DMA. So the stock is already extended 136% from the 200 DMA. So there are chances of a pullback to at least the 21 or the 50 DMA. क्योंकि जब भी 100% से ज्यादा 200 DMA से extension हो जाता है, तब जो pullback hota hai, that can be sharp. Some 5, 10, 15, 20% pullback is, there is a probability. I'm not saying that will happen, but yes, this is ideal that whenever the extension is too much, there is always a chances of a pullback. So, going with the stock, if you are holding the stock since long, then that's not a problem. Have some levels in mind, like the first always important is the 21 DMA, because this stock has got good support. यहाँ पे 21 DMA पे अच्छा support मिला है. So thrice it has pulled back to its 21 DMA and a sharp rebound from there. So now if you see that 21 DMA is breaching, then that might be a problem for the stock, and there are chances it might test 50 DMA. So if you are already holding, then you can keep these levels in mind, and fresh entry according to O'Neill is not suggested at this point of time. So few things that I observed over here is the closing. See, this one and the second, the closing is not going to the near the day's high. So if you see these kind of indications also that the volume is high, आज देखो volume काफी अच्छा था, ठीक है, but कोई major movement नहीं था. So there was some stalling in the stock, if you can see today. And even in these sessions, I think last week, after moving to a fresh high, the closing was near the day's low. So you don't want something like this to happen. But again, if it moves to a new high, then on a higher volume, then these goes out. But yes, you should be careful in taking fresh positions over here. On the downside, 21 DMA is very important. Let's take ABFRL. So after a breakout in August, there was a very good momentum in the stock. The rally was a decent one. The breakout was somewhere around 285, and it moved about 350 levels. But since September, it has been consolidating sideways and some pullback. The volume is also a bit on the higher side when this pullback happened. So now the important part is to reclaim the 50 DMA for the fresh entry, because whenever after the breakout, if the stock doesn't breach its pivot, जैसे कि यहाँ पे breakout हुआ, ठीक है, pivot का level breach नहीं हुआ और थोड़ा pullback खाने के बाद अगर फिर से 50 DMA is reclaimed, the stock again reclaim its 50 DMA on a volume which is higher. थोड़ा accumulation देखना चाहिए, RS rating में improve होना चाहिए, the line थोड़ा ऊपर जाना चाहिए. If these things happen and you see buyer demand is improving, so if the technical ratings gets improved and the stock reclaims its 50 DMA, then that's a positive sign, and that gives a fresh entry area whenever the 50 DMA is reclaimed on the higher volume.
This is Vakare.
Yeah.
Can you give me chart for Fiem? I mean, one of the stocks in our buy watch list as well. I mean, talking about from the parameters. I mean, one can see probably it's satisfying all the parameters in terms of either EPS strength, your RS rating, even what Rushit is probably pointing out to your institutional investor support. That is, your fund holding for the stock has been improving tremendously. If you look at 18.52% for the number of funds, share held by funds also improving. If you look at the results for the last 2 to 3, 4 quarters, it's been improving tremendously. Plus, on the right-hand side of the current base as well, and even the previous base formation, both were superb in terms of good accumulation on above average volumes. I mean, one you would probably want to see on the right hand side of the base, big blue bars in terms of volume, good price volume action as well. And similarly, if you look at I mean the current levels as well, it's just like marginally above I mean the ideal buy zone of the pivot. Why would not be suggested in current markets would be why because markets are at an all-time high at the current moment, and even if you buy at the higher end of the buy zone in terms of if you talk about the stop loss levels of 7 to 8%, then the risk management becomes a real problem. It's as it's appropriate probably to buy these kinds of market as close to the pivot as possible to probably keep your risk management in shape and in proper perspective. So overall, if there is some slight pullback in terms of probably to the pivot, probably or to the 21 DMA holds around those levels and probably find some kind of volumes as well, probably a very good stock to watch out for. The other, Rushit, we can look at is Timken. Yeah. So forming a stage 2 double bottom initially, like from the stage 1 base, like it had a very good breakout was there in the model portfolio as well. And then market correction happened, and then with the market correction, you could see the stock formed a double bottom base as well. That is, it corrected. So with the market, it corrected as well. Talking about from the parameters front, it's still satisfying probably all the parameters in terms of a very great EPS strength, your buyer demand, your group rank, your RS rating as well. So the stock nearly on the right hand side of the double bottom base, the stock nearly gave a 20% move, and it broke out from there as well. But post such kind of a move, you always see some kind of consolidation or some kind of correction in the stock as well. So currently, probably in the ideal buy zone, and one looking at the stock can definitely have a look at the stock. But as we always say, try to buy it as close to the pivot as possible. And what today's action was also good in terms of, if we talk about the rebreakout, we talk about from the rebreakout perspective, it was a successful rebreakout. So yeah, definitely a candidate to be watched out for. If the stock is there in anyone's buy watch list with a strict risk management rule or a stop loss rule of 7 to 8% can be looked at. So the other we can look at is Asahi India. So the stock is post the results as well. The stock is moving in the sideways range, mainly because if you talk about it, this you could see sales and EPS growth, but on the auto front, I mean, this, the stock is into providing your glasses to the auto industry and the float glasses that goes into the real estate and the construction sector as well. So in terms of the float glass, this stock is holding up its operating margins in upwards of 30%, which is a really commendable sign. But in terms of on the auto front, if we talk about it, the company is seeing some kind of pressure on the margin front, unable to pass on the raw material prices. On the demand front, the demand is really strong, as we can see across the auto sector, volumes coming in on the PV front. If we talk about it, PV front, some PV front, little bit on the CV front as well. PV has been really strong. If we talk about it, FY23 demand is expected to remain strong, but what the company is fearing and the street is fearing in terms of your freight cost coming down, the container cost coming down, and some kind of pressure from the low cost imports as well for the automotive segment. So probably that is creating a overhang on the stock price for the company at the moment. Overall, if we look at from the William O'Neill perspective, your fund holding is improving, the buy demand is good, the price strength is fair. But if you look at the RS line, that's going down. So at the moment, if the stock reclaims its 50 DMA on above average volume, the RS line moves higher. And if you talk it from the pivot levels as well, it's 12% from the pivot. So it's a good runway at the moment for the stock as well. So if the stock moves higher on above average volumes and shows some good accumulation, breaks out, then can really be an ideal candidate, because at that moment even your RS rating for the stock would improve, because 12% is a good span for probably the stock's rating to improve.
Thanks, Vakar. So there's one question about the tire industry. So see, if you look at the tire industry, that has been in a good shape, especially after the decrease in the raw material cost. So the input cost was very higher for these tire companies for the last year, or you can say 6 months back. But since last 3 to 4 months, and especially recently, the prices have been very low for the raw material prices, the rubber prices, the synthetic rubber, the natural rubber, the crude derivatives, the crude oil ka price control mein hai. Now it is below 90 for many weeks. And so this has been something positive for the margins, because demand was robust for the tire companies. So no major issues around the demand. But the problem was the margin, the raw material cost. But I think now it is getting eased. So that's always positive for the tire industry as a whole. The second important thing that you need to look about is the global demand. So globally the demand is quite well, and especially Russia had a very big tire industry, and their exports to the European market was huge. And after the sanctions, ये जो पूरा sanctions का game चला, तो 10 से 12 million tires every year were getting imported by the Europeans from the Russia, right? So now they are shifting to the other places, and India is among one of them, having a good presence in the tire industry in the Europe. A lot of companies are very active over there. So वो जो market share पूरा मिला है due to that also. And you look at the utilization level, 80-90% of utilization is there for the most of the tire companies. So the only problem was the raw material cost, the input costs were higher, but now it's a bit under control. And if it remains throughout the quarter, if you see the December or the first half of the next year, then I think the rally might be good as far as the tire stocks are concerned. So overall setup looks well for most of the tire stocks.
But Rushit, just I'll add a couple of pointers on this. As you rightly pointed out, I think there are two aspects to the whole business itself: the replacement market and the OEM, which is the original equipment manufacturing market, right? Which means your original manufacturers like a Maruti, an M&M, a Hero, a Bajaj. And there are different tires made for two-wheelers, four-wheelers, commercial vehicles, and even your tractor, which is a farm equipment segment as well. So replacement demand, which is the aftermarket, as tires get worn out, I think that demand has held up pretty well. Two things. One, I think the duty imposition that has been done on China and other Southeast Asian economic countries. We had an inverted duty structure earlier. I think that was largely corrected. So that probably gives some amount of respite. And the second element is that global rubber prices have corrected significantly. They're almost 145, 150 odd rupees per kg. That shot about 200, 225, in fact, even 250 at one point of time. Now, rubber derivatives, nylon cord, fiber, all those prices are also correcting. And therefore, as restocking starts happening with newer inventories at lower cost, that margin support is there. To validate Rushit's point in terms of exports, because of the energy crisis that we've seen, there has been some element of pressure when it comes to manufacturing from Europe. But then you need to largely classify yourself in terms of how much of replacement is getting serviced for each individual tire company. Are there well spread out in terms of servicing different parts, like a PV, like a two-wheeler, like a CV, and farm equipment as well? And the last but not least, how much of leverage do they have on their balance sheet? So cumulatively, everything will obviously come down in terms of the EPS rating. And expectation is that earnings should hold out largely for the tire sector, with good demand seen domestically and pass-through of prices, ensuring stability of margins, at least sequentially happening on a global scale as well. We can go ahead, Kushal.
There are some questions from our YouTube live viewers. Tata Motor is one of them. So, as yesterday only, it closed above its 200 DMA, first time after breaching it in the September. So overall, if you see the chart structure, the volume on the downside were a bit lower in the last few sessions, and it is trying to hold It's 200 DMA as of now. So over the last couple of years, there has been a strong improvement in the Tata Motor as far as the new car launches are concerned. But the problem still remains that it's a consolidation of the JLR business in the Europe, in the China. But the problem is over there, the Chinese lockdowns is over there, जो zero COVID का policy, उसके around काफी volatility है नहीं है, बंद करना है नहीं करना है, ठीक है. So one thing is that Chinese market for the Tata Motors. The second thing is about the European market. So higher inflation, a bit of slowdown pressure over there. So last year में जो एक मोमेंटम पिकअप हुआ था वो कंटिन्यू नहीं हो पाया ऑटोमोटिव इंडस्ट्री में, स्पेशली फॉर द प्रोडक्ट्स ऑफ द टाटा मोटर्स इन द यूरोपियन मार्केट. But the Indian domestic business is really robust. So the waiting time, if you see for any good Tata Motor car, is very high. Even the orders from the government sector, जो buses के order है, their truck business. So the commercial vehicle वाला जो department है इनका, that is also been in a very good shape. Even the PVs and the CVs in India are doing really well. But over here also the margin pressures are there. जो अर्निंग्स आना चाहिए वो नहीं मिल रहा है. So every quarter, like, people wait that about the profitability of the Tata Motors, but they are still not able to go profitable. But there are expectations that in the next financial year, we discussed last year also, that in the next financial year. But yes, the way the EBITDA has improved and the market share is improving, so if you see some good improvement in the European business as well as the China going back normal, there can be a very good improvement in the profitability of the Tata Motors, and that might ultimately reflect in the price. So there was a sharp rally from the COVID lows, and but if you see since last 1 year, it has been moving sideways after making the highs in the last October 2021. It is moving sideways, oscillating around the 50s and the 200 DMA. So the ideal thing is to wait for the relative strength to improve, the technical ratings to improve, and some good result coming in the 1 or 2 quarters. So you want a positive ROE for the company. So that's when you need to look for this stock. Otherwise, it's 18% off highs and 18% from the pivot. So there might be some pressure in, while moving higher. So according to O'Neill, not a good time to add this stock to your portfolio. But yes, it can be the part of your watch list over a longer time. The second question from the YouTube live was the Max Healthcare. So yes, it formed the 3B consolidation base, but it gave a decent breakout. The volume was also good as far on the breakout, but unfortunately, it never sustained on the higher levels. November 2, it went to almost 482 level, but intraday reversal was there, followed by some selling in the stock. First, the 21 was breached, then on the intraday basis, the 50 was also breached, but it again rebounded from the 50 DMA, and currently it is holding near 450 level. So it is going towards the re-breakout. So overall, a good story. Max Healthcare, no two ways about there. The fundamentals are improving. The fund holding has been very good. If you can see, almost 30% increase on the QOQ basis last quarter, and 64% increase on the QOQ basis in the share held by fund. So the growth in the business, the fund holdings, the technicals have been decent. So look for the re-breakout. So that's not always that अगर एक बार fail हो गया तो you should forget that stock. So that's not always the fact. Sometimes if the re-breakout is very strong, you see that the breakout is on a good volume and closing near the day's high, then you might again consider it in the ideal buy zone. थोड़ा RS drop हुआ है, if it catches up then it's quite well. Otherwise buyer demand में इतना problem नहीं है. अभी भी A-, the buyer demand is quite decent over here, and the EPS is improving with the improvement in the result. So 1 or 2 more queries and then we close for the session.
Rushan, we can go to the metal sector. I think somebody had asked for. Are you done with the YouTube query? Sorry for that.
Yeah. So Nifty metal.
Yeah. So I think there was a initial question that was put forth. And now let's understand. When you're talking about metals, you're talking about ferrous, which is iron. I mean, steel companies You're talking about non-ferrous, which largely deals with aluminum, copper, lead, zinc, and you're talking about the other companies which include your scrap makers as well, to the tune of which probably are ancillaries to the whole sector as well, to the likes of HEG and the examples thereof. Now, I think the recent development that has come through is that export tax has got reduced. But if you look at export prices and you start comparing that in terms of the parity with domestic prices at this point of time, they are far lower in terms of net realizable value. So to that extent, even if the duties have come off, because prices have come off quite significantly in the global markets benchmarked by the LME, primarily based because of if you start working backwards on what is happening with China, the zero COVID policy, they are trying to relax it, but the overall structure on the macro front, which has happened with the fallout on financial services, real estate, demand coming off, has taken a significant toll. So if you look at FOB prices, which I was tracking for steel stocks, both HRC and the CRC, which is your hot rolled coils, cold rolled coils, your long and flat, used respectively for real estate or automobiles as well, has come off significantly. So two ways to look at it, specifically when you're talking about steel companies. A, realizations on the domestic front better, even if export tax has got out. The net realizable value on the export front is far lower when you're talking about on a domestic scale. So I think even if volumes start coming through, which I doubt might, even if they get pushed through, it will happen at a lower price, which means your margins might probably get affected on the global scale. Have input costs come off generally for the sector? Absolutely, yes. So I think Q3, Q4 onwards, as they start restocking in terms of newer material onto their balance sheets, it should start reflecting, and domestic demand probably is holding out, which means numbers should be okay. But still, I think if you're looking at an enterprise value, I think it's still something that we need to probably look out for. Debt has come off significantly for a lot of these players, including the likes of SAIL, JSW Steel, JSPL to a large extent during the COVID period. And a large element in terms of how new capacities are going to come up will determine how much of leverage can these companies generate on a domestic scale. When it comes to the non-ferrous part, if you look at Hindalco, which was also one of the questions that was discussed or asked, if you look at their balance sheet, there has been improvement in terms of the net debt to EBITDA. Novelis, which is their international arm, the operations are holding up. They're probably looking at good business, a large part of it which comes from beverage, still holding very decently. Expectations of EBITDA on an absolute and an EBITDA per ton basis should improve. The back-end operations that they've got in terms of smelters, mines, should provide some amount of backward integration, and the kind of investments that they're doing on the renewable front, giving them a stamp on the ESG facility as well. However, if you go through their presentation in detail, they have actually given that aluminum prices are also coming off quite significantly. So even from a Q2 to Q3 transition, aluminum prices are actually off to a large extent, which means how much of the translation effect gets benefited on the balance sheet still remains circumspect. Hindalco is there in the pivot level, but if you look at the EPS and the RS rating, it's still a low. It's a little bit on the lower side on the O'Neill lens, and there are all these factors which move around. Copper, largely expectation over a longer period of time used for electric vehicles. Large usage is obviously there for the metal as a whole. But all these factors also determine on how inventory levels are placed, how much of demand will come back at what point of time, how is the pricing, what are the freight rates that are probably happening, so on and so forth. So I think for the sector as a whole, I think there are a lot of ifs and buts that are probably happening. EPS, RS ratings not up to the mark, which are appropriately reflected by the comments that I'm probably making. Now let's go to the entire thing in terms of freight, and there was a question on the shipping industry as well. On the shipping front, I think a large part in terms of determination of prices, at least on the spot level, get determined very dynamically. So you cannot have a fixed metrics placed in terms of how different vehicles and across charters. So if you have a time charter, you're probably far more resolved in terms of price variations that happen, because that basically takes into account for a certain period of time a fixed rate that is probably discussed, whether it's an LPG carrier, an LNG carrier, a dry carrier, a Suezmax, a Supramax, so on and so forth. So I think if you broadly look at two broad gauges for the shipping industry, the dry Baltic and the wet Baltic. The dry Baltic is basically for commodities which get transported in smaller variation of ships compared to the large. So if you are looking at the VLGC vehicles, which is very large gas carriers or very large crude carriers, they've got a huge tonnage capacity which is available to them. And a large element of what I've been probably studying is that LPG carriers, their prices have still held on pretty reasonably. Now, the age of a ship, how much of ships are probably getting added with shipyards and ship repair mechanisms, large docks being out of China, being affected. The nearest dock then becomes in the Asian context, Korea, to a large extent, Singapore, and Dubai becomes an important hub when you're talking about the European and the American routes to probably open out. Now, during COVID, as there was a shortage of container shipping lines, you had seen rates zoom through the roofs. They have corrected quite significantly at this point of time, and everything is probably measured in terms of dollars per day that you've got for either these large vehicles, your Suezmax, your Supramaxes, or even your bulk carriers. LPG is the only part of the business which is holding out in terms of prices. Now, the overall metric which probably ensures that how shipping is probably doing is your deadweight tonnage in terms of how many ships you've got, how much of weight that they can probably carry, what is the age of your ship, and large element in terms of how much leverage have you probably taken off in terms of utilization thereof. So if you look at normal balance sheets of SCI, their presentation, great shipping looks in, I wouldn't say great shape, but I think at least the balance sheet is reasonably comparable in terms of debt being very, very reasonable at this point of time, appropriate hedges, the average length of ships probably going through as well. And therefore, when you're talking about the entire sector as a whole, it is going through a huge amount of shift at this point of time. And the large unknown is how these rates might behave. You might have an average estimate, again, for shipping companies in terms of the operating costs that they carry, maybe $8,000 to $12,000 per day, depending on the size and the type of ship. But the rates on spot basis can vary on the line in terms of the container, in terms of the shipping route, in terms of ultimate economics of demand supply. So I think Great Eastern was something which is there, but very, very volatile at this point of time. And therefore, if volatility in earnings start creeping in, you might have a similar reaction that probably come through on that. For the paper sector as a whole, the question that was asked by PS1, since we are covering a lot of sectors right now, a large element of paper usage a couple of quarters back as the unlock trade happened and is still presumably happening with offices opening up, schools moving at full throttle, is largely captured into the price, right? The second element is input costs. Again, all commodity consumers are going to benefit third quarter, fourth quarter onwards because prices have corrected quite significantly. But here you need to differentiate, again, as I said, whether it's a commodity consumer, whether it's paper, whether it's textile, on vertically integrated operations, because they will be able to stand out the test of times in the next few quarters if things really start getting worse in terms of a slowdown or some kind of a added elementary risk that you got from added slowdown from both Europe and the Americas as well, right? So in this context, input costs are going down. They have already taken price hikes to a large extent. There are different types of paper. So let's understand the kind of dynamics for the shipping industry. Every industry will have its own dynamics as well. There is coated, there is uncoated paper, there is copier, there is paper which is used in our average daily life, which use cups and plates, there is corrugated paper, there is a packaging board paper. So which company is doing what, how much of vertical integrated operations is there, which is how much of inputs or raw materials are readily available in-house, how much of renewables are available in-house, because that saves a lot of energy as a cost to buy from the grid itself. How much of water availability is there? There is huge element of water that is needed to make paper, every kg of paper. Your dealers, distributors on the front end, apart from the back end that we are talking about, how much of it is you're exporting? What type of product and paper are you making appropriate to the market size? Now, the largest moving market in India at 23 million metric tons of the paper industry size that we've got is between packaging and corrugated paper. Apne jo Amazon jaate hain, example, as an example, I think all these papers and packaging and corrugated board is the largest consumer of paper, followed by your printing and stationery as well. So how much of variety have you got on that, which vertically integrated operators are going to distinguish? Why they are not moving? I think a large part of the question also lies with the fact that along with a lot of mid caps in the broader space or small caps, a large part of the move has happened. A lot of stocks are consolidating. A large part of this news is in the price. But largely, I think these players will still make a difference, in my opinion, in terms of reported numbers. If you look at the numbers this time around, whether it's a JK, whether it's a West Coast, whether it's a Sesashai, whether it's an Andhra paper, phenomenal set of numbers, right? That can very well continue, though the base will become higher and higher for the next financial year. But if you take the view in terms of the next few quarters with passing of prices, volume growth, leverage, less debt, vertically integrated operations, these players relatively like a JK, West Coast, again, not recommendations. We already have that stock in terms of our research recommendation as well. Should hold out. But again, a large part of that move in terms of breakouts for mid caps, like the normal universe, have just not been working out to the full extent that we are looking at. There was recent news in terms of JK buying out a corrugated paper manufacturer for 832 odd crores. Again, very good move because there is huge consolidation happening here and there is strong growth in terms of dynamics that will happen. Because the paper industry expected to grow itself at 5-6% over the next few years. And large paper manufacturers are obviously going to benefit. So I think that's my take in terms of how the setup is. The hope is that earnings should stick around for paper companies. For textiles, it might be a little bit of a longer road, in my opinion. But again, I think we probably need to look at vertically integrated companies here, where a lot of weddings around the corner. I just had my views put out in CNBC in the afternoon itself. It's a $100 billion industry as we look at it, largely dominated by apparels. Exports are showing some signs of slowdown with discretionary spending patterns coming down. And therefore, I think local players, like we've got players like a Manyavar, Raymond has obviously moved significantly higher. It is in shirting, suitings, but yes, not completely integrated like players like a Vardhaman or a KPR Mills. So you'll need to probably distinguish yourself in terms of the front-end players, having no access to backward integrated operations, and vertically integrated players who are also into apparel, or into yarn, and who consume these yarn domestically, I mean internally, so that they can have better dynamics in terms of the front end of the fabric making that they are doing. So I think large part of how the question is, Vedanta is 8% to pivot. The O'Neill methodology works well. As it starts moving higher, along with Vardhaman. Vardhaman is also almost 8%, if I'm not mistaken, and KPR around 7 to 8. But all these players are there. Monte Carlo's interview yesterday on one of the business channels was very interesting. They're presuming second half to do well, and home textiles. Generally, what I've read across a lot of transcripts from these textile companies should start holding out. Though Trident, which is one of the biggest players, right, when it comes to towels and mattresses, exporting that might face the heat. So you need to distinguish yourself on how they are placed on a fundamental perspective and how they are placed in terms of the O'Neill lens. Because the O'Neill lens will clearly tell you the entry point and the supply factors which incorporate a large part of these fundamentals itself. So I think the mix is appropriate in terms of the EPS RS rating and the placement itself. So I think that was my take here. We might take a couple of more questions, maybe take a few stocks like APL Apollo, some pipe makers, Rushit, and a couple of more, and then we'll probably call it.
So if you look at the APL Apollo, it is forming a base on base kind of thing. So as you guys know that if we don't move more than 20% from a breakout, तो वो alphabetically increase होता है like 2A 2B. So over here, if you see, यहाँ पे second 2A base बना था, उसके बाद the gain was less than 2%, then again the 2B base, the 2C, and now we are forming a 2D base. So overall, it is moving sideways for a last year or so. And if you look at the setup recently over here, the setup has been quite well. Over here, it is holding its 50 DMA. यहाँ पे कुछ knee-jerk reactions थे, but again, it is holding a certain level. The EPS strength is quite well. The RS needs to improve. The buyer demand is good, but you need to wait for a clean breakout over here. And need to be careful as there are multiple instances when the breakouts have failed. So you need to be very diligent while you choose the stock. Not taking more of them, just one or two more. The last one may be the TVS Motor, and then we close the session. So yeah, the stock is forming the stage 3 flat base. So there was an excellent rally after the breakout from the stage 2 base. So since June, the rally was very good after the breakout from the 750 level. So their market share is increasing. If you can see the TVS motor, even the exports business of the TVS motor is doing really well, and they are also trying to move ahead on the EV path. So overall, the two-wheeler demand has been a decent one, and the TVS motor has been able to take good advantage from that. And if you look at the setup currently, it is forming a stage 3 flat base. Stock is still below its 50 and 21-day moving average. So once it reclaims its 21 and 50-day moving average, the next focus will be on the breakout, that is the pivot, which is 11% from the current price. So once that happens, see, अभी देखना important क्या है पता है, ये 11% अगर बढ़ता है तो किस वॉल्यूम से बढ़ा और कैसे बढ़ा, ठीक है. That is important to watch out for. If you see that's a decent one, then third stage you might consider for a growth stock. Little risky third stage, but with a good risk management, a stop loss firstly placed, you can always look for the stock if it breaks out. So that's it for today's session, guys. I hope it was useful to you. A lot of insights from Mayuresh on many of the sectors, the discussion by me and Vakar on a lot of stocks. We tried to answer most of your questions, but if in case we have missed any of the question, and if you really want the answer related to it, then you can always send us an email, and we will try to answer it as fast as possible.
Thanks, Rushit. Thanks, Vakar, for your time. Thank you guys for tuning in. As Rushit said, please mark a mail to us because it's not possible to cover everything. Try to follow again, the point I'm trying to raise again and again is try to follow the methodology that we are trying to put forth. Try to incorporate that in your learnings through the filters that we've got, how much of a value addition that happens in terms of all the factors that we speak about all the time. That makes a great addition in terms of your learning curve. And as I always say, and I always repeat for the sake of repetition, we are all moving up the learning curve. So thank you for tuning in. Best of luck till we meet next time.
Sure. And yes, one more thing, you do join our morning bell as well as the after hours commentary. So daily we will discuss about the O'Neill methodology and the setups of the stock, about the global market, Indian market. Every day we do the discussions. So at 8:45 a.m. in the morning as well as the 4:30 in the evening. So if possible, please join that session at 8:45 a.m. tomorrow. We conduct it every day, in the morning as well as in the evening. So Rucha, you please paste the link over here. So it's on the Zoom. Also, you can go live on YouTube. So whatever is convenient to you. Thanks, Dhruv. Thank you, everyone.